Welcome back, it's JWalter here, and here's your latest housing market update. In today's video, I want to take a deep dive into housing affordability. I talk about this all the time on the channel because we have record high home prices and also mortgage rates have been increasing greatly. And on top of that, we have inflation at 8.3%, almost a 40-year high. So the topic of today's video is housing affordability, and I want to share some reports with you guys. And the main one I want to share with you guys is from the National Association of Realtors. So I have a lot of information to share with you guys, so I hope you guys get a lot of value out of today's video. And of course, if you do, please hit the like button. You guys know what to do. So here's the latest update we have from the National Association of Realtors. This was actually published last week, but I have some stats I want to share with you guys that were actually just published today at the time of this video, which is the 12th of May. So what it says here is that housing affordability declined in March compared to the previous month. Also, compared to 1 year ago, affordability declined in March as the monthly mortgage payment climbed 32% compared to 1 year ago, and the median family income fell by 6.6%. So obviously that's not sustainable when we have a decrease in the overall family incomes and a big increase in home prices and therefore the mortgage payment as well. So the average 30-year fixed rate mortgage for March was actually 4.24%. And by the way, at the time of this video, the average 30-year fix is around 5.5%. So mortgage rates have been increasing greatly since March. In any case, this report here is based on the rate in March, which is 4.24% on average for the month. Compared to 3.14% from 1 year ago. On top of that, home prices rose 15.2% from 1 year ago as well. So have a look at this. This is a graphic I shared with you guys yesterday, but I want to take a deep dive into this report here because I want to show you how housing affordability has become a big issue. And also I'm going to be sharing some stats regarding how each of the major regions in the US fared, and also the least affordable cities in the United States, and also the most affordable cities in the US as well towards the end of this video here. In any case, when we look at this housing affordability index, which by the way, the higher the number here, the more affordable housing is. So as their index decreases, so does housing affordability. So as you can see here, housing affordability has started to decrease big time at the start of this year, which coincidentally was when mortgage rates started to increase greatly as well. I'm going to be sharing some stats with you guys here in just a little bit. As you can see here, housing affordability has decreased for 4 consecutive months. Right now, the index is at 124 compared to 175.2 from 1 year ago. So one major factor about why housing affordability is a big issue, which of course is due to rising mortgage rates and of course rising home prices, but family incomes are not increasing at the same rate as home price gains. So as you can see here, the median family income from 1 year ago was just over $95,000. Now it's $89,000. So it has actually decreased even though home prices have increased 15% compared to 1 year ago. And the best way to share this with you guys is to have a look at this. This is according to the National Association of Realtors. I pulled this off their website. As you can see here, the median family income was $95,696 1 year ago. Now it's $89,000. So it has taken a decrease of approximately, $6,000 compared to 1 year ago. However, the qualifying income in order to buy a house with 20% down payment with using no more than 25% of your income, that's a qualifying income according to this stats here, the qualifying income 1 year ago was $54,000. Now it's $72,000 in order to qualify to buy the median price home right now. And this of course is because home prices have increased. So 1 year ago, the median existing single family house was $331,000. So in other words, on average across the United States in March of 2021, average home price was around $330,000. And jump forward 12 months later, now the median sold price is at $382,000. So a big increase of approximately $50,000. On top of that, mortgage rates have increased greatly as well, right? So 1 year ago, the average was 3.14%. Now for March, it's 4.24%. So what that means for home buyers is that it's becoming more and more expensive to buy houses because we have to put down more money for a down payment because home prices are more expensive. And also your housing payment is also going to be more expensive as well because of rising home prices and of course rising mortgage rates. So right now, the average monthly principal and interest payment to buy the median price home for March again at $382,000, gives you a principal and interest payment of $1,502 per month. 1 year ago, 12 months ago, the average was $1,138 per month. So in other words, approximately $364 more per month just because home prices have increased and of course mortgage rates have increased as well. So because of all these headwinds that home buyers are facing right now, their affordability index, or the National Association of Realtors Affordability Index, is at 124.0. And as you can see here, this is the lowest levels in at least the last 12 months. On top of this, have a look at the index compared to the last 3 years. So in 2021, the average was 153.5. Now it's 124. In 2020, it was just under 170. And pre-COVID in 2019, it was actually just under 160. Now we're at 124, a big decrease in a matter of 3 years. What I also found to be very interesting when I was analyzing this data for you guys is how each of the major regions in the US fared, because there are obviously some really big differences here. So they break it down by the Northeast, the Midwest, the South, and the West. The most affordable area or region in the US was in the Midwest, where the median sold price for a single family home was just under $275,000. Compare that to the West, the average was $522,000 for the average single family home in the West. So a big increase compared to the Midwest. And on a housing payment level, it's a very big increase as well. So in the Midwest, that would give you a payment on average of $1,076 given the rates back in March. Compare that to the West, your payment would be almost double that at just over $2,000 per month. In addition to that, have a look at the qualifying income in order to qualify for the median price home in these regions here. So in the Midwest, the qualifying income is just over $51,000, but in the West, it's almost double that at $98,000 per year. I found a really good graphic I want to share with you guys regarding how mortgage rates have been increasing over the past 12 months and how impactful this is for home buyers right now. So here's the averages for mortgage rates on a monthly basis over the past 12 months. So 1 year ago, the average was 3.14%. As you can see here, through the remainder of 2021, through December, mortgage rates were approximately in the range of around 2.9 to 3.1% for the average 30-year fixed rate mortgage in the US. Have a look what happened in 2022 though. We had a big increase in January by approximately 0.4 percentage points, and then another big increase in February, and even a greater increase in March. And mortgage rates have increased greatly since then because according to Freddie Mac, which was just released today at the time of this video, the average 30-year fixed rate mortgage is averaging at 5.30%. Which, by the way, Freddie Mac reports weekly averages on mortgage rates, not daily averages. So according to the most recent survey, the average is at 5.30%. And Sam Cater, who's Freddie Mac's chief economist, had this to say: homebuyers continue to show resilience even though rising mortgage rates are causing monthly payments to increase by about 1/3 as compared to 1 year ago. I believe what he's referring to is that according to the Mortgage Bankers Association, or the MBA, over the past 2 weeks, we're starting to see an increase in the number of people submitting loan applications in order to buy houses. So I believe that's probably what he's talking about there, because most recently we're starting to see some increases in people submitting loan applications. We'll have to see if that continues, though I'll keep you posted though. He also said several factors are contributing to this dynamic, including the large wave of first-time homebuyers looking to realize the dream of homeownership. In the months ahead though, we expect monetary policy and inflation to discourage many consumers, weakening purchase demand and decelerating home price growth. Yet another report that I found to be very interesting that I want to share with you guys is also compliments from the National Association of Realtors, which is also just published today at the time of this video. So what they said here is basically that we're starting to see rising inflation, and also we're seeing rising mortgage rates, and that's causing a lot of people who are looking to buy a house to cause some headwinds, because it's causing people to have a harder time for saving for a down payment. On top of that, rents have increased greatly as well, so that's causing further headwinds for people who want to realize their dream of homeownership. But let me read you this synopsis here from the National Association of Realtors, senior economist and director of forecasting. It says, although inflation eased in April, which by the way went from 8.5% to 8.3%, we're still at very elevated levels for inflation right now. It continues to rise faster than expected. That's inflation. In the meantime, inflation is affecting not only prices at the pump and the grocery store, but it has also spread to the housing market as well. Both owning and renting are becoming more expensive. Rates have also increased. Therefore, the monthly mortgage payment has increased by about $520 since the first week of January, when rates were 3.2%. By the way, rates right now are approximately 5.3%. So they have increased approximately 2 percentage points in a matter of 4 months, which is absolutely insane. Respectively, rents are rising at their fastest pace since 1991. As a result, while potential first-time home buyers need to spend more on their budget on rent, they also need to spend more money on their monthly mortgage payment if they're going to be buying a house. Meanwhile, nearly 20% of these potential first-time home buyers, which is 3 million renter households aged between 25 to 40 years old, already spend 50% and more of their income on rent. Therefore, rising rents and inflation make it even more challenging to save the money needed to make the transition into home ownership for these renters, which is a very good point, because if inflation is increasing greatly as well and rents are increasing greatly as well, that could cause home buying demand to decrease as well, because people don't have the money in order to buy houses right now. Like I always mention though, every housing market's different, right? So there are some markets where it's very challenging to buy a house because there's a lack of housing inventory and home prices are very expensive. Yet there's other markets where it's more affordable to buy a house. And here are the top 5 most affordable housing markets in the first quarter of 2022. And this is according to the National Association of Home Builders. Number 1 was in Lansing, Michigan. Number 2, Indianapolis, Indiana, followed by Scranton, Wilkes-Barre, Pennsylvania, Rochester, New York, and Dayton, Ohio. In contrast though, here are the top 5 least affordable housing markets in the US. And coincidentally, these are all located in California. You definitely pay to live in California. So the number 1 least affordable housing market in the US was actually in the Los Angeles area, followed by Anaheim, San Francisco Bay Area, San Diego, and at number 5, Stockton, California. So comment below with your biggest takeaways from today's video. Also, if you guys got any value out of today's video, then please hit the like button. I greatly appreciate that. Also, consider subscribing if you haven't done so already. Hope you have an awesome day. I look forward to seeing you on the next video.